So you want to know, why did inventory decrease faster than the experts were predicting? And what does that mean then for home prices? Well, stick around on this week's segment of What's Happening in Real Estate. I'll share with you the cause for the dramatic decrease in inventory and what that really is going to lead to for home prices in 2023. Thanks for sticking around. And as you can see, what does that mean for home prices? The median home price did tick down 1.2% this week to $410,000. With that rate, you can project that the end of the year will most likely end somewhere around $400,000, which is a good sign, though, overall for the nation, that's about a 10% growth year over year in the median home price. And so we know that there are some local markets, Phoenix, Austin, that are suffering quite a bit from year over year growth. But overall, the nation is doing well year over year in the median home price appreciation from 2022 to 2023. Now, you might ask, what does that have to do with inventory? Well, as you can see, the total inventory homes for sale dropped 2.5% again this week. Normally, you're going to see seasonality provide a decrease in the amount of available listings towards the end of the year, but you can see the dramatic change over the last 2 weeks right at the end of this line graph due to the fact that when we saw good intelligence or information coming from the economy and that of inflation and change to mortgage rates, meaning them softening, it led to more people coming back out, and that demand brought more people to contract properties, that the inventory dropped dramatically faster. So what does that really tell us is overall the inventory, when you can look at active inventory and projected single family, as you follow, September 1, rates spiked over 6%. And you could see seasonality wise, that was when we were normally going to start to see the decrease of inventory of homes across the nation. What ended up happening is you could see it was a little double dip where inventory then actually rose after September into October, November, and December. But this dramatic change over the last 2 weeks was a sign of what happens with buyers and the demand, because the real challenge in America right now is not the desire for home ownership. It's the lack of available homes on the market, the inventory, but that of the affordability based off of where rates are. So when you look at this, we'll probably end the year around 500,000 homes, which from an inventory perspective is less than where we were in 2019 by 37%. So you can see the different graphs here, the years below at the lower end of this chart, 2022, 2021, and 2020, is that if we did not see that spike in rates, natural inventory, we would have had the lowest amount of inventory at this time of the year outside of where we were in 2021. We all know that we needed more homes available for the crazy demand that there was at the beginning of this year and last. So what's very exciting about this is that we know as rates soften, we'll see a lot more demand. However, the challenge is unless more people are bringing homes to the market, we still may end up in lower inventory situations, which are good for home price appreciation, but they do make it challenging for competition or pricing. So what this really shares with us is overall, maybe the worst is behind us from what people were experiencing in the last couple months, which you can see from this graph of total single family homes pending contract with new contracts per week. Obviously, from both the light and the dark red lines, you can see there are fewer and fewer people participating or transacting in real estate. That's because there's less homes coming on the market and there's less buyers that have demand for this current market. The challenge with that, though, is that if the inventory continues to remain low, as soon as those rates decrease and there is then more affordability, we may see a surge of buyers coming in the market, which make it, again, a very competitive market due to the fact that there's not a lot of available homes. So the biggest thing to take away from this week is that it was good signs that potentially the worst is behind us unless we have poor readings in the economy and that of inflation and overall rates bounce back up. Meaning if rates go back to 6-7%, we may see decreased demand. And while new listings come onto the market, we may not know what that actual response is until about mid-January. So again, that's why we bring you the national housing market update, the local housing market update. And as we start looking at weekly in 2023, bringing you these updates, so that way you can just follow along week by week, because come the middle of January, we will know with where rates are and the flood over the next 90 days of inventory that comes to the market, how quick those homes go under contract. And the next slide that you can see here, which is the percent of properties with recent price reductions, is the less price reductions we see on those properties also shows the balance with demand for the price that people are bringing the properties to the market. And you can see that we peaked November 18th, and now we're starting to see a slower decline to the rate at which homes have to reduce their price to go under contract. But the nice part about this is over the next couple months, we'll be able to follow come mid-January what exactly is happening with the new listings coming. As we know, more people will bring supply to the market. And then with where rates are, we can figure out what's the demand for those and the pending changes. But the nice part about all of this is hopefully this is a good sign that the worst is behind us. And now we'll move into the normalization of this new market and see how long there is that of inventory building or how long there's that of inventory decreasing, and the rate at which demand, which we know right now is following that of rates. So continue to follow inventory and continue to follow rates. And right there, you have a good understanding of most likely what's going to happen while you spend time learning about the market. As always, we're excited to bring you the information, not good news or bad news, but just what is happening, so that way you can make the best decision for your family. And as always, please reach out with any questions, schedule a 15-minute market review, and we'll be happy to share more of what's happening with your situation and all across the nation. If you need access to the top 1% of real estate agents, be happy to connect you with that of the best all across the world. So from me to you, happy holidays. We will not have one of these next week, but I look forward to bringing you it the following week into the new year. And have an amazing Christmas, holiday, and everything else in between.